Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor. Talking metals, let's talk about gold here. The dollar index, which normally has that all else equal inverse relationship to gold, is pausing a little bit amongst euro strength. The euro strengthening ever so slightly today based off of, it should be much stronger than it is actually, based off of some of the Eurozone inflation data that we got today. Eurozone inflation on the headline number reached 1.9%. That's a year-over-year number, and that is a 13-month high. And then the month-over-month figure, 1.1%, that's an 8-month high. So some surprising inflation strength out of the euro, pausing the dollar. Gave a little bit of bid to gold this morning, but again, that inverse relationship between the dollar and commodities is when all else is equal. That means geopolitics, that means domestic politics, that means policy, trade policy, all of these things are not all equal right now. So gave a little bit of a bid to gold earlier, but right now we're pointing toward that Italy situation as well, which gave gold a geopolitical bid, and that is fading now. Italy is fading into the background. It's still a problem, but again, it's fading into the background based off of the idea that it's a political issue, and that political issue could potentially turn into a currency and fiscal issue if Italy were to try to leave the euro, and Italy's not trying to leave the euro in their current situation. The issue is, to kind of boil it down, that there was a finance minister appointed and the president rejected him because he was a big component of leaving the euro. So he's not in play right now, and there's new elections that are going to take place. So the problem is here, but it's fading until those new elections take place, and there's not any sort of referendum to leave the euro on the ballot. So that's not giving gold a push higher, which is what it was doing. It was one of the only geopolitical events that pushed gold. Now, we could have something happen with Iran, depending on how the other countries treat the nuclear deal now that the U.S. has pulled out, but that hasn't happened yet, so that's not able to give a bid to gold either. And then U.S. inflation today, which kind of paused the dollar fall and kind of made it a little bit less of a fall than it could have been. We got core PCE, and it matched expectations year over year, but it beat by 1/10 month over month. So does that mean we're getting inflation in the U.S.? Well, it is the Fed's favored inflation indicator over the CPI figure, so it is the one they watch most. But that year-over-year number, still pretty benign at 1.8%, matched expectations. So that also did not give a big sell-off to gold as it would have done had it strengthened the dollar as much as it possibly could have. So gold, very low volume day overall. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.